Okay, hello everyone. Welcome to this price ladder and important point we've got to be aware of looking into this setup. Now, if you take a look over at this order book, which I've highlighted, let me just quickly get a little pen out so I can draw on it. Here we go. So if you take a look over at this order book in here, this is our order book. You could see if just by looking at the bids and the offers, a little bit of an anomaly at 161.50. Just right in there, nestled at 161.50. We've got a pretty sizable, chunky looking bid of 1,650 lots. Now, mind you guys that this is currently taking place at around, I'd say it was about 5:15 p.m. That's BST. Now, considering it's now 5:15 and that's an hour after the cash bond settlement, which was at 4:15, there's not many traders in the market at this point in time, but we're slowly drifting lower. Now, you may be tempted to take this trade, but I want to show you how a potential front run could go sour and what kind of price action clues and order flow clues you can look for in order to identify that. Now, we went through this little setup with the price ladder trading team that we've got going on in the price ladder trading program. We went through this on the chat room live. I think a couple of guys spotted it as well, and we're taking a look at it. And I just wanted to show you guys. So let's just say, for argument's sake, that we were bidding at these 161.51s. So we'll just bid there, 10 lots, 161.51s, and we'll wait to see if we can get filled just in front of that 1,600 lot, and we'll see how it gets there. Now, what we do know about this, just before we take a look at how it reacts, what we're going through specifically, and I think you guys can tell, is a front run gone sour. So we're expecting one thing and we might see something a little bit different. So let's just see how we react when we get to that area. Now, we've been filled on the first 5, now filled on the second 5. Let's just see how we react just in front of here. Now, what we want effectively is maybe 1 or 2 ticks. So we're going to offer 52s here. We've already been filled. We're offering 52s, trying to take a tick out of half our size. And then maybe try and take another couple of ticks on the next 5. Now, we've actually gone offered there and traded the 161.50s, which is fine. It's not something horrendous yet. We're still seeing potentially a setup that could play out. We're trading into 50s, 16 lots there. Just gone bid 51s, traded 1 lot into 52s. No one actually trying to lift 52s, however. So we've now gone offered 51s again. Now remember, I'm not the only guy that sees this, and there's probably quite a few people long here at 51s. But notice, we just tried to lift about 100 and 150 contracts or so, and the offer now, this is where it starts getting interesting, the offer now at 51s has reloaded. So we tried to lift at 51s about 100 contracts or so, 100 plus contracts, and we've reloaded. This is after hours now, guys. And now we've got another 215 have just hit into the bid at 51s. So we've got now a more sizable looking offer at 51s, 350 contracts. This is looking a little bit shaky for us now. So given the context of this, and given that we're not getting filled immediately, and we're starting to see a little bit more action in here, I would start to get a little bit nervous once this starts dropping below 1,000. Once it stops dropping below 1,000, that key critical psychological sort of size where people that are actually long it might start thinking this is getting worn down a little bit here. Maybe I might want to consider getting out. Notice again another 134 contracts. Look, guys, another 134 contracts. Tried to lift 150 contracts, and we're reloading again. So now I'm starting to see even more sort of signs and cues that maybe this position might go astray. So I'm still long. I know my risk is below these 49s, but so is many others. So in the case scenario now, and that drops below 1,000, I'm actually starting to think, okay, potentially someone might want to take these 50s out. And together with a lot of other traders, many traders are going to be looking to try and take this guy out if they can't seem to get filled or get any sort of uptick. So now we've gone bid back up to 1600. Let's see how we react now. Gone big back up to, we've got the bid back up to 1600. Bam, the 600 gets removed. Now that just might be a spoof trying to instill a little bit more confidence in those longs. Now we've dropped back below. I'm going to try and remove this guy here, try and get 5 off at least, because now I'm getting a little bit worried. I've got fill in the 1, see if we can get the rest. Got fill in the rest, and now we've just got 5 lots in the market, which we're kind of leaving on speculatively. But to be honest with you, if I see this drop down any further and we start getting down to sizes like we see below here, I'm probably looking to hit at 50s, because I'm feeling as if we might see a bit of a flush to the downside. We've gone back up to 1,000 lots. Every time we try and lift these 51s, it seems there's more and more reloading. It's making me a little bit more uncomfortable. Can't seem to take 51's bid. Remember guys, this is after hours. We now reloaded 1,300 contracts on the offer at 51s. Cannot take a bid. Again, try to take a bid, cannot hold it. This is where I'm starting to feel a little bit uncomfortable. So I put in my 5 lot there, try and take it out, because at this point we just for a split second tried to take it bid and we couldn't. So at the very least, now I'm not going to take part in this trade anymore, because look, again, another 100 lots try and lift at 51s. We had 100 lots try and lift, and we reloaded again. We've just put another 100 or another 150 lots at 51s. So we've now taken almost as much size at 51s as there was sitting on the bid at 50s. So in terms of how many people are potentially caught long here at 51s, as this imbalance starts to play out and starts more balanced, as we can see there, the sellers take out 50s, and anyone that's caught long at 51s now has to cover 51s, 50s, 49s, 48s, and they're effectively having to pay down on their positions, because obviously the risk reward in front running that trade was only maybe 1 or 2 ticks, and they have to get out for, again, another 1 or 2 ticks. So if they let it go any further, the risk on that trade is way too much. So those people that get caught in it, especially after hours, have got to get out as quickly as possible. And you can see now we're glued to the low. We've just taken out that 50, taken it out very quickly with 600 lots. You can see only 623 took it out, and we immediately traded through 49s and 48s, now trading 47s, and we're glued. So anyone still long at 51s is feeling very uncomfortable, because we're still glued to that low. We've got that bit of a flush to the downside. Now, the moral of the story here is obviously, guys, what I wanted to try and explain and show you guys in this sort of story is the context. The context is the most important bit. And there's 2 major points. One, we are after hours. In an after hours trade, you can usually expect a lot less liquidity, a lot less market moving liquidity. And when you get a front run like that, where there's that much size, you usually think, well, it should move away from it fairly quickly, because it's after hours. It shouldn't be that many people trying to sell that market and push this for a breakout through that big level. And the fact that we could not go bid, and this is the second part of the context. The second part of the context is just ahead of that large order, we saw an immense amount of reloading slash absorption. And that is, within that context, if you understand what you're expecting coming into a trade like that, and what you should be expecting is, you get fill 51s, you trade into 50s, the market realizes, damn, that's a big bid, and we go bid 51s, bid 52s, maybe bid 53s. Just a quick 1 or 2 ticks, maybe even 3 ticks off of that bid. But we saw something we were not expecting. Now, if you've seen these sort of order flow patterns again and again and again, and this is primarily the reason why we do so many of these drills on the price ladder training program, is you know what to expect from a good front run. And when you don't see what you expect on that good front run, you should be able to react quickly and swiftly because if it doesn't play out the way it should, something will most probably happen, which is the opposite of what you're expecting. So instead of seeing that bid up of 50s to 51s, 52s, you actually see the market go offered, take out 40 50s, and then flush all those longs that were front running. Now, I'm not condoning to go short through that front run, but what I'm saying is at the very least, if you can't see what you're expecting, just be wary, and instead of hoping, fear a little bit that it might not play out. This is always that give and take. That famous quote from Reminiscence of a Stock Operator: you should always be fearing when you're hoping and always hoping when you're fearing. And in this case scenario, instead of hoping that it's going to work in your favor and it's going to go bid at some point, you should start reading the price action, reading the order flow, saying, okay, maybe I should fear that this might not play out the way it should. Always question, always see how the market's trying to undermine. So that's basically what I wanted to go through. It's a bit of a front run that's gone sour. We can't always post order flow plays that always work all the time. This is one that hasn't. That's potentially a way you could have gotten out of it. You could have stayed in it a little bit longer, and if you're quick enough, try and hit 49s. But I feel as if in these kind of case scenarios, either go for a scratch or just hit 50s, guys. If it's not playing out the way you should, in the long term, if you're trying to take a little bit more risk on a front run strategy that you're only trying to take 1 or 2 ticks out of the market, there's just not enough juice in that trade to be risking 2 to 3, 4 ticks. Especially when it goes wrong, everyone just flushes out at the same time. Right, thank you guys very much for listening in. Take care and good luck for the rest of the week trading. Bye-bye.